Hello, everyone. We want to welcome you to our webinar today. We're excited to have Lisa Doran from Innovia Consulting with us, and Lisa will be presenting on cash flow forecasting in under 30 minutes. And before I pass it over to Lisa to cover on this hot topic, I would like to remind you that this session is being recorded and it will be posted to our on-demand webinar library for you to review and share with anyone. And as always, if you do have any questions, please feel free to type those in the questions box. We will have the Q&A at the end of our session so that Lisa can answer those for you. All right, so now I'm going to pass it on over to Lisa to kick off our presentation.
Great, thank you very much, Angie. Welcome everyone, appreciate you joining us today. Today we're going to go ahead and work our way through what cash flow functionality we have available within Business Central. We will be looking at this in the Business Central environment today. However, cash flow functionality was first introduced in NAV 2013. So it's available from that version forward. And one of the additional functions that we're looking at today is the assisted setup. And that was available beginning in NAV 2017. So everything that we're looking at today, other than the assisted setup, is available if you are running NAV 2013 forward with the assisted setup in NAV 2017. So what we're looking at here is just an overview of the features of the cash flow forecasting functionality that's been built within Business Central. So it is based on some assumptions and it's doing some calculation of some future cash flow. It is pulling from multiple sources. So it's got GL entries, sales dollars, purchase dollars, receivables, payables, etc. You can have multiple forecasts built, so you could generate multiple forecasts over time if you want to have snapshots and do comparatives. You can look at the entries that are suggested into the forecast and make some changes to them. And again, with the assisted setup, which we'll walk through, we'll see how easily it is to get started with cash flow forecasting. What we're going to do is walk through the assisted setup first, and then after all the setup is complete in the short process of the assisted setup, we'll visit each of the different setup functions so we can talk a little bit about it for anyone who might not have the assisted setup available in their version, so that they would know where to go to access that information if they had to set it up manually. So we have a variety of cash flow sources that we can set up in the system that can be used as part of the forecast. So we obviously have our receivables, and that would be based on any of our open customer ledger entries. We have payables based on our vendor ledger entries. We have our liquid funds that is typically looking at the GL for our cash accounts. We could create manual expenses or revenues, so things that might not yet be posted. If we know maybe we have a capital expenditure coming in future months that we want to accommodate, and maybe it's not something that's in the budget, we can use these manual options for that. It also looks at open purchase orders and open sales orders. We can have fixed asset budgets and disposals that would be included. If you're using the service management functionality, it looks at service orders that are out in the system. Again, we could use GL budgets. We could use job budgets if you're using the job functionality. It can accommodate taxing. And then also another option that is available beginning in NAV 2017 is Azure AI. So provided there is enough history available, the AI may be able to do some projections for you as well. So what we're looking at here is really just sort of a visual of what we're doing to set up the cash flow. So we have a few different things that we have to set it up, and then it's available for reporting or analysis in a variety of different ways. So what we're going to do now is just go ahead and jump in and take a look at walking through the assisted setup to get a cash flow setup in our demo environment. So here we're in Business Central, and what I'm going to do is I'm just going to search, and I'm going to look for my assisted setup. And from this list of assisted setup, I'll just go ahead and select my setup cash flow forecast. And when I do that, it's going to present me with a handful of questions along the way for fields to populate. And we'll take a look at that. So we'll just go ahead and click next. So first, what it's doing is it's looking for the accounts for cash accounts. So it has done its best guess. It's suggested the cash accounts. These are the GL accounts. So for the liquid funds section, and if we just drill down there, it's went ahead and found the cash accounts that are set up here. So if it can't make the distinguishing determination for what your liquid accounts are as it's going through the wizard, you certainly have the ability to put those in individually. But here it's done a suggestion and found the proper accounts. Next, it's asking us how often to update the cash flow forecast. So our options here are never. If we want to do it manually all the time, we can do it daily or we can do it weekly. So we'll leave it with a daily option. Next, it is asking us if we want to enable the Azure AI. So that would give us a chance to have AI do some forecasting for us, do some projections based on some historical information. We'll talk a little bit about that a little later. So we'll click next. Now it's asking us about taxing. So how often do we pay our taxes? So we have monthly, quarterly, according to our accounting periods, or yearly. So for this purpose, we'll just leave it at quarterly. Then it's asking us for a date formula for paying taxes. So for this instance, we'll just go ahead and accept this particular example. So we're putting in 20 days here. And what type of account do we pay our taxes to? In my limited demo environment, I don't really have a good vendor account, so I'll just go ahead and pick a GL account. And I'm going to pick an account here. And then that's it. So when we click finish, we can see it's going through and doing some calculations very quickly, and it's creating actually a forecast for us. It's marking our assisted setup for the cash flow forecasting is complete. So we'll go ahead and close this screen. And so now what we'll do is we're going to actually walk through these setup components individually. So for anyone who might not use assisted setup or who might want to work through this individually, we'll talk about the various components that go into the setup for cash flow forecasting. The first step is what's called the chart of cash flow accounts. And when we look here, what we see the system has done is it's just given some logical names to the different areas that it's trying to compile for the cash flow. And we can see we also have some amounts that have already been calculated because it's run through the first forecast. But if we just go ahead and drill into one of these for a moment, we'll look at receivables. And what we're doing here, the cash flow forecast is arranging values that affect the cash flow based on these accounts. So they're set up following a high-level structure of the financial chart of accounts. For any accounts that are using GL activity for forecasting, you're able to define the GL values that you want to look at. Here in this particular view, we're looking at receivables. So what has happened is the assisted setup has given it a number, and then we've given it a name. The account type, if we drill down there, typically everything would be set as entry, but you do have the functionality within the cash flow chart of accounts to set up totaling and heading accounts very similar to what you would set up in your GL chart of accounts. In our example here, everything is set up as an entry account type. Over on the right-hand side is the important field, this source type. If we drill down, you can see the preset list. These are all of those different cash flow sources we had mentioned before we got started. So this is giving us a chance to assign a cash flow account to each one of these source types. You can, of course, have multiples. In particular, maybe where it would come into budgeting or anything related to the GL. You might have multiple cash flow accounts in that case. What we're looking at here is a very simple model where it's just a one-to-one relationship between cash flow account card and the source type. I'm going to close this for a moment just so we can take a look at our liquid funds. The liquid funds has been set up with GL integration. And we can see in this drop down, we have options of balance, budget, or both. So balance would typically be selected for your liquid funds. Budget would typically be set for maybe any of your P&L values if you want to forecast based on budgets for your revenue or anything of that nature. And you could choose both if there's a scenario where you have budget and current activity that you would want to have included in the forecast together. And then the GL account filter just specifies those GL accounts that are included here. Okay. So this is just the list of all of the cash flow accounts. Again, in the assisted setup, it's doing a one-to-one relationship between the source types available. Next, we're going to move to the actual cash flow setup screen. And here within the cash flow setup, this is where we link our applicable chart of cash flow accounts to the automatic value calculations. So we can see here in our account sections, we're just assigning those chart of cash flow account values that we just have set up to the different areas here in the calculations. We also see our automatic update frequency. This was our value that we selected in the assisted setup. We could change that if we wanted to. Similar to most all of the other setup areas within NAV or Business Central, we have to have a number series assigned to the forecasts. So we have that here. In our tax tab, this is pulling in the information that we specified if we want taxing to be taken into consideration in our cash flow calculations. And then finally, we have the Azure AI tab, and this is giving us the information for our forecast predictions and how AI will help with that. Obviously, this is, we turned it on as part of the assisted setup. If we find that it's not giving us information that we want, or if it's not usable, we can always just disable that here. So keep in mind that if it doesn't find enough data, or if the data has a wide variation, it will not make a prediction because it doesn't want to predict based on either questionable or insufficient data. Okay, so what we're going to move to next is we're going to actually go to the cash flow forecast. And what we've seen is based on our assisted setup, it has created one default forecast for us. Here we could create new ones if we wanted to. At this point, we're just going to go ahead and take a look at the one that was created. So we have some optional setups here within the forecast that we want to walk through. So first is consider discount. So if we enable this field, what will happen is the forecast will assume payment discounts, so days and amounts, when it's calculating the forecast values. Okay, so this would have to do with any customer or vendor discounts that might be applicable. If you enable consider discount, then consider payment discount tolerance becomes available as well. So if you have payment discount tolerance configured, so then it will also take the tolerance dates into consideration as well. So for example, if you have a tolerance where you have the grace period for discount days set up as 2 days, it will apply that tolerance as well. Next, we have consider payment tolerance amount. So if this is enabled, the payment tolerance amounts would be taken into consideration in the forecast. So any of those calculated tolerance amounts would be considered when it's forecasting. Next is consider the cash flow payment terms, and this is an important field. So what we have normally when it's forecasting, it's going to go based on the terms that are on the customer ledger entries or vendor ledger entries, for example. So those are the actual payment terms that are applicable when we're generating the invoices to the customers. But let's say, for example, we may have some customers who might have 15-day terms, but historically they always pay with 20-day terms. If you wanted the cash flow forecast to reflect the actual terms that they pay by, not the terms that you have actually granted them, you have the ability to define the cash flow payment terms code on a customer record. And then when the forecast is taking into consideration any open values for that specific customer, it will use the 20-day terms rather than the 15-day terms. So that is certainly, it's an optional setup. You can define that again on the customer record. If we just take a look real quick, I'm just going to navigate quickly to customers, so we'll look there. And you can define it on the customer record, and then it will only be taken into consideration in the forecast if you enable the field in our forecast as we just looked at. And let's scroll down here. Here we have the cash flow payment terms code. So obviously the normal payment terms code for the customer applies, and that's what's in their history. But for the forecasting, we could optionally define this. And if we look up here, it is just a lookup to the standard payment terms table. So if you would be forecasting at terms that are different than what you might normally offer to a customer or might get from your vendor, you would have to set up a supporting payment terms code so that it can do the proper calculations. So keep that in mind if you're considering using the payment terms code. So if we define it here at the customer record, I'll just hit escape to go back to our forecast card. And if we have enabled our consider cash flow payment terms here, then the forecast will use that optional payment terms calculation in terms of forecasting any of the customer or vendor receipts or payments. Over on the right-hand side, we have the opportunity to define information related to budgets. So the GL budget from and to would define date ranges. So it would define the date ranges of the budget that we may want to take into consideration for this forecast, as well as down below we have our default GL budget name. So if we have any of our cash flow chart of accounts that we have set up that look at budgets, this gives us the opportunity to define that budget information that we want to take into consideration. We also have manual payments from and to, and so that has to do with the date range to take into consideration from any details that we might have defined in the manual revenue or manual expense data. And then the final setting is the move overdue cash flow dates. And when this field is enabled, what will happen is if there are any overdue customer or vendor ledger entries, they will be forecasted as of the work date rather than the past due date. And when we're within our forecast here, we can see on our statistics the various calculations that it's already done to find these values. And any of these are drillable. They are flow fields, so we can get to the underlying data within it. So in this case, when I drill into liquid funds, it's taking me into the GL account balances as of the date of the forecast, and it has calculated what the account balances are to come up with our liquid funds. Same with receivables, we can drill in here, and it has pulled in the ledger entries for any of the open customer invoices or any customer transactions as of that date. And what we can see is we're drilling into the table cash flow ledger entries. So as cash flow forecasts are processed, that data is captured into the cash flow forecast, or excuse me, cash flow ledger entries. So you can always drill in and see what was taken into consideration at the point of that forecast versus where you might be at today. So if you only forecast maybe weekly, you can see what the forecast might have been last week as opposed to today if you haven't yet updated the forecast. So again, in our walkthrough, we had it set up so that the system is going to automatically update that, update the forecast for us. However, if we are going to create a forecast and we want to manage it manually, we would do that from within the cash flow process here. We would go to the cash flow worksheet. So we could choose to go to our cash flow worksheet. And this is going to give us the opportunity to update data manually if we want to update the forecast data manually. So within our worksheet, we obviously see we don't have anything calculated in here. So we have a process that we can run to suggest worksheet lines. And what that's going to do is it's going to pull in all the information from the applicable areas. So from the general ledger, the open purchase orders, sales orders, receivables, etc. At the point that you are running this function. So if I run this, what it's going to do is it gives me the opportunity to select which forecast I'm running it for. So in the event that you have multiple forecasts, you can see them. You can pick which forecast you want to update. So at this point, we only have one. And then now we have this long list of all of the different source types that we would want to choose to include. So I'm just going to go ahead and enable them all. I'm going to skip budget because we don't have anything that's budgeted at this point. And finally, this group by document type. If we wanted to have all the sales orders together and all the purchase orders together, etc., I could enable this field as well, and that would pull in the data into the worksheet grouped in that manner. Okay, I'll go ahead and just click OK here. And it's basically doing the same calculation that it did at the end of our assisted setup. It's pulling in information based on the activity that it finds as of the time that it ran through the process. Okay, so it's pulled in all of the invoices, sales invoices, etc. And we can see here that we have an overdue checkbox. So these here that are checked indicate that the invoice is overdue. So here we can see over on the right-hand side in the description, it's giving us the fact that this is a posted sales invoice with 3/31/19 indicating the due date of that particular invoice. So if I move this out of the way a little bit, as we see down here, so 3/31 was the due date, which obviously is past, in this case, our work date, which is April 8th of 2019. So these are marked as overdue, and then based on our forecast setup, where we had enabled the flag to use the work date rather than the overdue date, we can see all of these came in with our cash flow date of the work date as opposed to the overdue date. We also can see down here that we have some warnings. And what this is giving us information related to is this has to do with our, if I drill into this, can I drill in that? Nope, try to see it. So it's telling us that we have a significant degree of variance. So this has to do with our Azure AI, and it is coming up with variables for these calculations. So it's not trying to forecast the Azure AI. It's basically saying that it just can't do it based on the level of information that we have, because there's just not enough information in the system. So it does give you the breakdown to tell you that it is running into some issues here, and it's not going to be able to do the forecast based on the limited information it has in this particular case, or it has too much variety in the data. So these are just some warnings that you might see, just to give you some indication of whether the system is able to pull in the predicted forecast or not. In this case, it's telling us that it cannot. Okay, so again, if we are manually processing this, we're going to go through, it's going to pull in all of this information into the worksheet. From here, we could adjust any of this information if we wanted to, change some dates, if we wanted to delete information, anything of that nature. We could work within this worksheet to modify some of the information. Once we are satisfied with everything that it has suggested as part of this worksheet, we can go back to process and we can choose to register. And when we register, it is going to update the cash flow ledger entries with this worksheet data. And that is then how the forecast gets the information. So what we looked at a moment ago when we were within the forecast and we drilled into the flow fields and saw the details within the cash flow ledger entries, this is where it's originating from, and it has been registered. So in this case, I won't go ahead and register it because we already have the data and we haven't changed anything at this point, but that would be the manual process, how we would go through to generate the data into the cash flow forecast moving forward. So one other thing to consider when we have this forecast, what do we do with it? So we have a couple different ways to look at this data other than just the statistics here over on the right-hand side. So from within our cash flow forecast card, I could choose to go to report and look at the cash flow date list. And what this is going to do is it's going to give me a snapshot of the cash flow components over the period of time that I define when I run the report. So the from date assumes the work date, and I could decide what I want to look at in terms of seeing the future forecast. So I might want to see the next 5 weeks. So I want 5 intervals with the interval length at a week. And if I just preview this, it is giving me nothing. What do I got here? Hold on. Oh, because I created my forecast worksheet. My apologies. I started my worksheet and I didn't register it, so it does want me to recalculate. Let me do this real quick. Let me register this. So let me actually say no here, just to clarify. So when we start the process in the worksheet, it is clearing out the cash flow ledger entries that are currently stored. So at the point where I started my worksheet, it updated this data and basically cleared out the current forecast. So in this case, I do need to go ahead and register these details in my worksheet so I can reforecast. Okay, so let's close this back out. And let's just double check. There we go. Now we have our data back. Excellent. So let me come back to our report here. And we've got our 5 intervals for a week. Let's take a look at the report. And so here is sort of a static view to the breakdown of our cash flow. So by week, it's giving us a view to what we expect our numbers to be. In this particular case, it's cut off a little bit. So it's showing it on 2 different pages. So keeping in mind that this was just a report preview, I could certainly take this data out to Excel. So if I just run that one more time, I could take this out into Excel. So then we have all of our information here. So this is giving us our cash flow over the 5-week period that we selected. And again, this is handy, but it's a snapshot and it's a report and it's not live data. So the other option that you have available to get more of an interactive view is if we come to navigate and cash flow forecast, and if we choose cash flow availability by periods, this is going to provide similar data to what we just saw in the report, but it's more interactive, so we can actually see information here. We can choose our view if we wanted to see it by day, week, month, etc. So if we have it here by week, and I'm just going to scroll back up to our data here. So in this view, we still have the same numbers in the intervals that we suggested for our report, but here we have the ability to drill into them. So it's a little bit more user-friendly for providing any analysis if you're looking at the actual details. And it projects it farther out into the future. So in a report, you're limited, you know, in the multiple pages that you might want to generate in the report. But here you have the ability to just sort of on the fly change this if I wanted to see it at monthly buckets, etc. So this is a nicer view, a little bit more user-friendly because it's more interactive to what you might be looking at for your forecast. And finally, with our forecast in place, I'm just going to close all of these back. And I am currently, let's look at my role center. I have been assigned to the accountant role center. And with that role center, I can scroll down here and I have a chart that I can see. It's available to me that gives me more of a graphical breakdown of the components within the forecast. So this gives me a chance to see the different components color-coded, and then each one of these, as I look at them, I could drill into the details behind them. So in this case, I was highlighted on the purchase order color portion of the graph, and it brings me into those cash flow ledger entries for purchase orders. So again, especially if you have the system updating this automatically on either a daily or a monthly basis, this forecast chart gives you a nice way to just see graphically how your cash flow looks over time as well. So I think we're well under 30 minutes, and what we've been able to do is either using assisted setup to do some of the setup for us or work through the various screens that are available to us. We can create cash flow forecasts to be updated either manually or automatically moving forward, so you can see a quick snapshot into your cash flow forecast in very short order. Angie, do we have any questions?
Thank you, Lisa. Let me check here. Yes, we do have a question that came through.
Okay.
They received an error message in setup. The length of the string is 14. It must be less than 10, and it referenced a dimension value that was more than 10. How do I address that error? It appears that one or more of our dimension codes is too long.
Okay, that's a good question. So you're in cash flow setup, so let me just navigate there. So within, I just want to clarify, it's within the setup screen here, right? It said within the setup that we got an error?
Yes.
Okay. Can we find out what version that's on, Angie?
Yes, they are actually running on version 2016,
Okay,
and then they also, actually, hang on one second.
sure.
The error actually occurred in assisted setup nav 2017.
Oh, okay. Okay, let me make a note of that particular error and let me find out an answer of what we need to do to work around that. And Angie, you'll be able to gather the contact information for that?
Yes, I will.
Okay, perfect. Let me look into that particular error and how we work around that with the assisted setup, and I will provide you feedback on that.
Okay. And then I have another one. They're running on 2016. Can we install the assisted setup objects from 2017 in our 2016 environment?
That's another good question as well. Let me find out if those are available to pull out separately. So 2017 to 2016. Okay, I will look into that one as well and be able to provide some feedback.
Okay, not a problem. If anyone has any further questions that you would like to ask Lisa, um, please go ahead and get those in the questions box. And like these, she will have to address offline and get the answers to you guys. So we will get those over to you as soon as possible. We do have your contact info, so thank you. And I'd just like to thank Lisa again for presenting today, and to everyone on today's webinar, or if you're watching on demand, we thank you for joining us. All right, well, we do have a few more webinars coming soon. This afternoon, we have John Grant and Jenny Hollingsworth from Innovia Consulting, and they are presenting on Be a Master at Capacity Routings. It's a continued series of their Business Central for Manufacturing 101. And then tomorrow we have Tracy Borgetsker from Innovia Consulting, and she's going to be presenting on Protect Your Business with Positive Pay in Microsoft Dynamics. So check out our upcoming events on our website, and that's innovia.com/events. And also to let you know, Innovia has a podcast going on if you have not heard of it already. It's called the Innovia Conversation, and we just want to encourage you to listen to our selection that Steve Waltz and Jeff Progolski have provided to us over the last year. They do about 2 episodes a month, and you can find out about all the different podcast platforms to listen to on our podcast page, and that's innovia.com/podcast. So check out our selection and subscribe so you'll be notified when those new episodes air. All right, well, we thank you again for joining us, and we look forward to seeing you again soon on another Innovia webinar.